Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 15th of June. Starting off with Charit Gold, where we're still in the aftermath of that gap close, bear trap gap close, which is normally a decent signal. Got bullish divergence there with that lower low for May below 22 pence in the RSI window there, the bullish divergence, and just breaking through the 200-day moving average at 27 pence, looking for an initial target here to retest, I suppose, November resistance and a bit beyond up to 34 pence. Over the next few weeks, perhaps as soon as the end of this month, now that the stock seems to be going up and staying up with those rising 50 and 20-day moving averages helping the cause as well. At least while we're above the 20-day line there at 25 pence, looking for 34 pence over the near term. Stock which has been slightly problematic on various fronts over the recent past is Hemogenics, but it does seem to be trying to find a floor here. We had the first signal that the shares were perhaps ready for recovery with the bullish divergence there with the lower lows in April and May matched by, not matched by lower RSI traces, well, in fact, higher lows in the RSI window. In the last, I suppose towards the end of last week, we've seen the share price break above the 20-day moving average, 1.9 pence, and above that, looking forward, hopefully, to the top of that rising April trend channel at just shy of 4 pence. As soon as the end of next month. If you're cautious on the shares, which some might be, you're looking for a decent end of day or weekly close above the initial June resistance at 2.2 pence, which looks like we should get from today onwards. We've also got the RSI pushing through neutral 50, which should also start to speed up momentum. Upside valid at least while we're above the floor of the channel at 1.9 pence there from back in April. Onto a stock which I don't normally look at, or the type of stock we don't normally look at, but as it's still pretty thin. We're looking at Interpersonal Finance here today. Couldn't resist the gap higher after the bear trap, I suppose just below or towards the the May support there. The low there around 125, the low so far this month around 124.80, so that's a nice little bear trap there. Gap higher today. Off the 50-day line, also a positive, and that should see the shares at least head towards 155, which is the top of that rising trend channel from January. But the gap here through resistance, if we hold above the initial June peak at 138.60, we should see 155, hopefully as soon as the end of this month. Another stock which I've never looked at before and is looking quite juicy from a technical perspective is Kinamazing. Here we've had a gap through resistance, which is normally a technical thrill, let's say. We've got a rising trend channel, which I'm just about to draw here from back in January. Top of the channel heading towards the £2.60 level. Should see that by the end of this month. And the upside valid at least while we hold above today's intraday low at 206. Maybe you could split today's range to date in order to get a tighter stop loss just below maybe 220, but about 206 looking for 260 and perhaps quite a lot more, given this is a very strong looking trending chart there. So pretty impressive stuff on Kinamazing. Perhaps not quite so fiery at the moment, but you never know, it might start to heat up, is MGC Farmer. Here we've got a situation where the shares look like they're bumping along the bottom. We've got a situation where there is some bullish divergence here in the RSI window, so slightly lower lows, slightly higher highs in that particular area. And current situation is that while we're above the recent support at 2.5 pence, looking for perhaps a move back towards post-May resistance as high as 4 pence. If you are cautious here, after even though there's been a gap higher today, wait for an end-of-day close through the 20-day line at 2.7 pence to give you a notional target there at the 50-day line around 3.17, and maybe that'll be seen sometime towards the first part of July up to the 50-day line, and then after that later in the summer up to 4 pence. But early days yet, so no need to rush, I think, at this stage. If you are cautious, probably wait for an end-of-day close through 2.9 pence, which was the initial June resistance. Pensana starting to look a little bit more sprightly after the rather sharp pullback we had from, £2 plus back in March. Nice higher low here for the last couple of days around the £1.15 level, and above that on an end-of-day close basis looking towards the 50-day line and post-May resistance at £1.39. And ideally that's going to be seen by the end of this month. The big plus point here, I suppose, in the near term is the way that the shares approached the rising 200-day line, but were too strong to actually touch it, and that is a bull signal in its own right, something which is quite rare actually. So we broke that resistance line there from April around £1.05, £1.10, and had a decent follow through after the bounce on the 20-day moving average. One of the stars of the show in the recent past has been TSarium, which just continues to deliver solid green candles. Maybe get a bit tired ahead of moving up towards the December resistance line or December resistance line projection at 9.5 pence, but the RSI at 90 suggests that we are pretty overheated, but at least while we're above the last significant peak there at 5.2 pence, looking for 9.5 pence pretty soon, perhaps as soon as the end of next month after any pullback or any cooling off has taken place. Just had that big spike in Tavistock yesterday, and some decent fundamentals showing through in terms of the announcement. Be interesting to see whether the shares can remain above the top of the gap higher that we had there at 3.6 pence. Ideally, there's no end of day close back below today's current low at 4.2. While we're above that, then looking for further upside here. Perhaps the best case scenario target, if you are a fan of the shares, is up towards 7.75 to 8 pence by the end of next month. But let's see how this current inside day goes, and the shares manage to settle down after the massive gap to the upside. A situation which has been something of a favourite since came to market is Tirupati graphite. We had the Sunday roast with the company presenting there on the weekend, but rather successfully, it would seem. The peak, the initial peak for June was around £1.36, and while we're above that on an end of day close basis, now looking towards £1.60. If you're a fan of the shares, maybe you'd be looking for a higher target there, up towards the £1.75 area, but I'm going for £1.60 at the moment, just because it seems to be a rather more achievable target in the near term, even though the gap higher through resistance that we had earlier this month is a very strong signal and should give the shares continuing momentum to the upside. Covered the next stock in my daily summary just an hour or so ago. Westminster Group, after 6 months or 7 months rather, just trading sideways. Looks like the shares are on their way with a gap through resistance so far unfilled. That is impressive. It'd be nice to see, what would be very impressive to see is an end of day close above that January peak at 5 pence. If we can manage that, then we're looking towards that December resistance line at 6.6 pence as soon as the end of next month. We're still in bull mode though, while there's no end of day close back below today's the top of today's gap at 4.7 pence, so above 4.7. Still in the bullish tack, but ideally we hold above 5 pence and the 200-day moving average just above that level. That's the black line there at 5.06 over the rest of the week. That would be quite a win for fans of the shares, who obviously have been waiting quite a long time, very patiently indeed. On to Wentworth, and here stock which looks as though it's going to try and break out pretty soon. It hasn't quite done it so far today, but we've got a rising trend channel that's been in place since the start of the year, and could take the shares up to 31 pence by the end of next month, while we hold above the floor of the channel there at 24 pence and the 50-day moving average. But a bit of a slower situation. It's almost like a slightly sort of reminiscent of the chart in Westminster Group, although a little bit more sort of positive in terms of the rising trend that we've had over recent months. Finishing off with Expediator, which I look at from time to time. Here we've got a situation where it's another decent, strong bull run. We've had unfilled gaps to the upside, one in November and then another one in January. That suggests that this is a very strong momentum situation and will continue to be so for the foreseeable future. On that basis, I'm drawing a line of resistance there from October, and that's currently hitting the price action there at 94, 93 pence. That could be seen as soon as the end of next month on any decent weekly close above 70 pence, which was the April resistance for the shares. So, but looking pretty strong and well set while we hold above the 60 pence zone on Expediator. That's it from me today. More updates tomorrow.